Good evening, friends and traders. Welcome back to my channel, Smart Index Edge. Today, I am going to come up with two setups. In my previous video, intraday is my business. In that, I discussed about the market cycles and also 5-day clock setup, that is weekly template, so that we can identify the stocks in which market cycle they are, and to get a parabolic trade or profitable trade that was designed for that. In continuation of this setup, market cycle setup, we need two setups in the market. In this video, I am sharing two powerful trading setups that can help you make a living from trading. These setups work on M15 and H1 timeframes, hourly and 15-minute time frame. And these are aligned with the market cycles and institutional moves. So these are all structured according to my weekly template and market cycle. First setup, what we need to is 15-minute setup. You should learn how to identify M and W patterns. You might have all heard about M and W patterns, that is the double bottom pattern and M pattern. Where there we are confirming entries using EMAs. For the confirmation of the W pattern or the M pattern, we are using EMAs for our entry. Either it for a long trade or for the short trade. Long trade in case of W pattern, whereas short trade in the M pattern. Along with that, we are using Traders Dynamic Index. Already I have made video on the Traders Dynamic Index. It is nothing but RSI with the Bollinger Band. And time your trades with precision. These are all the things, tools needed for our entry and also for our setup. Setup, what we are going to see is M pattern or W pattern, and we are using EMA as our assistance and Traders Dynamic Index. For precision trading, you can use even TWAP for precision entry and all those things. But Traders Dynamic Index, we will also mimic the pattern, W pattern and M pattern. You can see on the whatever it is not visible on the chart, you will get to see on the this TDI or RSI also you can utilize there. In hourly setup, what we have to do is we are discovering how to count market levels. Usually, market forms 3 levels of peak and spot peak formations. High, peak formation high and peak formation lows, and enter trades at the perfect reversal points. So we need to identify the perfect reversal points. For that, we are going to see for the hourly setup. We are going to master these setups. If you are mastering these setup, you will see a transformational change in your trading journey. In my video, in the morning video, how to read the candle, I had given given an example of Hindalco. Probably many people might have made profit in that. That was the setup. which I had already identified and I presented that. Even for the jubilant food also. Even in my previous video, fib and square root combo, I had taken that as an example. So watch the video till the end and level up your strategy. Step 1, M15 reversal setup. Identify market cycle position. So we need to know where, in which cycle a particular instrument, whether it is an indices or the stock or commodity, which is there in that setup. So I identified jubilant food at the peak formation, and it was at the peak. And even for the ONGC also identified at the peak formation M pattern. So that was the setup, and it was preparing for distribution, and we captured the markdown phase in the market. That is the most important for the retailer traders to capture the B in the markup or markdown phase. Markets don't move randomly. Hedge funds and big institutions drive price action through structural impulses and retracements. To spot a reversal, we use a combination of EMA and the Traders Dynamic Index. The first clue, a clear crossover. What is the first clue for us? A clear crossover between the 50 and 200 EMA. Suppose if it is W pattern, from the bottom we are identifying the 50 has to cross above the 200 EMA. As vice versa, when it is at the top. When it is at the top, the 50 will cross below the 200 period EMA. When this happens, we are likely near a peak formation low for buy setup or a peak formation high for the sell setup. The first thing is identifying the market cycle and also position of the any instrument, which market cycle it is in. That is very, very important. I have discussed in my intraday business, intraday is my business video. I have explained in detail about the 5 clock strategy, how to identify. So I had explained even in that video, Nifty is under markdown phase. On the next day, it was an history. You all noticed that it gapped down, and now it is, when it was around 22,700, I had made that video, it gapped down. Now it is trading near 22,500 and odd. That means market still, even the indices is still in the markdown phase. Nothing, no accumulation has started, or still it is in a markdown phase. Today, what happened since 2 days, it was a redistribution, what it was undergoing through in the Nifty index. That's why there was no trade for since 2 days. Monday, Tuesday, there was no trade, and Tuesday was an inside day. It was an inside day that the whole part of the day traded within a previous day's range, Monday's range. Step 2, what we are going to look for is MRW patterns. The core of this setup is a powerful MRW pattern. That is the core of this setup. A W pattern at the 200 EMA signals a potential bullish reversal, while an M pattern signals a bearish reversal. But here is the secret. Not all W and M patterns are valid. That also you should have in your mind. Sometimes they will not be valid. The confirmation checklist, what are all the things you need to see is, first, market makes an initial low or initial high. In case of M pattern, initial low in case of W pattern when it is forming. Their next checklist is EMA crossover. That is still slower period. 5 and 13 EMA cross. There is shorter period moving averages. They will cross and the market will rally, confirming the leg. So, bullish leg, that is W pattern leg, will be starting, first leg. And correspondingly, we need to see divergence on TDI. In that, the first leg forms outside the Bollinger Bands. That is, almost it is coming out of the Bollinger Band when it is forming like that. That is like a extreme 2 to 3 standard deviation like that coming out, which it will not sustain, oversold position. While the second leg is inside, showing momentum exhaustion. These are the things we need to see. Entry trigger is the candle closes above the 13 EMA for a W or below it for M. Once this setup aligns, we enter with confidence at the below of the pattern. Next is the hourly 1 hour market cycle setup. What we are going to do is, in hourly market cycles, we are going to count the market levels. After the breakout, you are going to count 3 levels of upside. Understanding the market cycle is non-negotiable for consistent trading. Price moves in a 3-level cycle before reversing. First, level 1 is initial breakout move. Level 2 is market consolidates and pushes higher or lower. Level 3 is final push before reversal, often forming a peak formation. Step 2 is identify peak formation and M bar W pattern. These are the things you need to see in the hourly market cycle setup. In the 15M setup, I will explain you what are all we are going to set up. I am going to take you to the chart and going to explain it to you. Once we see 3 levels of rise or drop, we wait for an M or W pattern on the hourly time frame. A confirmed pattern means institutions are likely to take profits, signaling a potential reversal. So this is a very good setup in in continuation to my 5-day market cycle setup. So how to trade it is, spot the peak. The market forms a triple top or triple bottom. Next checklist is wait for the confirmation. A candle closes below or above the 13 EMA. Third one is TDI divergence. The second leg should show weakness. When combined with the 15-minute setup, this strategy becomes incredibly powerful, catching high probability trades. Within a day, you can catch. I'll show with an example of the today's presentation of Bajaj Finance. You could have caught 2.5% of up move in the Bajaj Finance with precise timing. Closing and call to action is, these two setups have helped countless traders transform their consistency, and now it is your turn. If you truly want to master these strategies with complete clarity, which removes subjectivity from your trading. Okay? So let me go to the chart. Traders Dynamic Index I've already plotted. This is TDI. In my previous video about the TDI, I've made a video. You can go through it. And for my setup, market cycle setup, 5-day template setup, I've applied my indicator, Nalini EMA indicator. I've given it to many people, the script, whoever asked me. You too can ask me if somebody watching my video, I can give the script. That is, you can message me on this number, WhatsApp me on this number, 98452096000. This is my number. You can WhatsApp me. You are free to ask me this indicator script, and I'm going to provide this. This is nothing but this indicator is a combination of multiple indicators. Let me again explain about the indicator, because many people might not have seen my previous videos. For them, again, I'm going to explain in this indicator whatever necessary for our setup. For my weekly template, it has been compiled to make as a one indicator, because in trading view, you need to pay money for utilizing multiple indicators. So this indicator, it incorporates so many parameters in this. So here we are having moving average and display of the day of the week. That is very, very, very important to know on which day of the week the market is setting up, and we need to know whether W pattern or M pattern is forming on the Wednesday or Thursday. Any day we need to watch carefully for that. These are the display of the week, and these are the colors. For the Monday, yellow color, it has been color coded. You can change colors according to your wish. Monday, Tuesday, blue color, Wednesday, neutral color, and Thursday, gray color, and Friday, violet color has been utilized for identification of the day of the week. And it also has got display high and low. In my another video, I'm going to make about the high and low. High and low of the previous day, or high and low of the previous week, high and low of the previous month are very, very important levels, because big institutions will act at those levels. There you can identify support. Sometimes you might have seen stocks dipping below the weekly level, and closing inside the weekly level. You will see a parabolic up move in the certain stocks also. So monthly levels, weekly levels, and daily levels are the boundaries which are important. For that, a condition, I mean, in the indicator section, it has been added. And display separator is also there. If you are using display day of the week, you need not use the display separator. Display separator, if I enable it, I'm enabling it. You can see, 1 minute. It's not acting now. It takes time. Yeah. If I enable this, actually separate, it separates the week, every week actually, with the black, this one. It's not working now at present. You can, it is still rotating. So it takes time. So it has been coded for Monday, Tuesday, Wednesday. You can see clearly separators over here. This is a weekly. You can see when there is a separator, you can see And week on week, this Hindustan Petroleum Corporation is in the downtrend. It is making a lower highs and lower lows. You can see there, and the price at present is approaching the previous week's low. Hindustan Petroleum. So quickly you can make out by quick glance you can identify what has happened in the previous week, what is the trend in the weekly trend you can identify clearly. Let me go to the indicator section, inputs, and you can, there is display of the linear regression also. I made about the linear regression. Either you can utilize linear regression. Why linear regression means to identify the standard deviations. The overbought, oversold condition, 2 standard deviation, 1 standard deviation, that is also included. This is the linear regression which has been taken by the person who has coded DGT. That person, from that indicator, it has been taken and it has been compiled over here. Here, linear regression line, I have already made a detailed video about the linear regression, how it is calculated, why it is important, and why linear regression line will give you trend direction. That is the intention of the linear regression. Even you can utilize display fractals. If you check it, you will get the fractals for the pivot points. If you want it, you can take that. In the moving average section, you are getting 13 to 21. You can change it for 18 to 31 for the shorter period, what I discussed in my video. And 50 and 200 is there. Okay. And then here when you scroll it down, you are seeing, if you check this, you will get show previous day high and low. And if you check this, current day high and low, if you want, whatever you want, you can do that. Show previous week's high and low, show current week's high and low, show previous month high and low, show current month high and low. And the highlight of the week is, it is highlighting with the color code, like a highlight Monday. If I uncheck, see, this will go off. Yellow color will go off. It is taking time. The indicator is taking time. So anyway, leave it because it is working there. You can see that. I'm checking it again. Yellow color is back. So if we uncheck this, you will come to know which color has been coded for the Monday, Tuesday. These are all the necessary tools for my setup, weekly setup based on the market cycle. So in this video, 2 setups, what I have discussed is, first requisite is in the 15 minutes time frame, the market has to the 50 period moving average has to cross the 200 period moving average. Let me go to the Bajaj Finance, because it satisfied our requirement. I'm resetting the chart. Let me, as an example, I'm going to show it to you. Okay, let the thing work. Here you can see, I'm zooming it out. See, on the Friday, market came down and rallied up. It gapped down. So the market started setting up. Here you can see the leg down. It is the first beginning of the leg down. On the Friday, it has come out of the RSI. It has come outside the Bollinger Band. So it is the preparation of the peak low formation in the market. So on what day? Friday, it started accumulation phase after the parabolic down move from Wednesday. The cycle started, the distribution cycle started on Wednesday. It ended on Friday. and it made a lower low. And you can see clearly a W formation, and the RSI is forming a higher low here. And on Tuesday, the market underwent with consolidation. There you can see in the first leg, the slower period moving average crossed beneath and it came down. And here you can see 50 period moving average crossing above the 200 period moving average. At 50 period moving average crossing above the 200 period moving average, this blue and violet color, and the yellow color is the shorter period moving average. So the market made a W pattern which is clearly evident on the RSI. If I draw, it becomes a little bit difficult for the identification. You can see W pattern. Sorry, let me remove this. Let me mark it properly. So this is the W pattern. I hope you can identify this pattern over here. And a peak formation low was made on Friday in the early hours. And the market underwent through accumulation phase, and you can see then rest was the history today. If you would have identified the whole thing, and if the Bajaj Finance were to be in your radar, you could have captured. Let me take this tool, capture 2.5%, 2.21% in the market. It's a parabolic up move. 2.21% is not a simple thing on a single day. So now the market, it has come inside the Bollinger Band, RSI. So it is trying to make a peak formation. Within a single day, parabolic up move has come. So we need to identify whether it is a beginning of the, reversal pattern, M pattern. For that, it has to come down like this and it has to make a 3 levels of peak formation that you need to identify in the hourly time frame. I'm on the 30-minute time frame. I'm showing it to you people. Hourly time frame. And there is an immediate, that green dotted thing is nothing but the previous week's high level is marked. No, current week. Yeah, high level has been marked. So automatically you will come to know this is the resistance. I have in my previous video, I have shown you how to calculate even the resistance levels based on the fib plus square root method. And even GAN method also, you can find out the levels of resistance and all those things. So this is an example of this. Let me go and show you another example. Jubilant food. Jubilant food. See, you can see here. Let the indicator work. It takes time. Let it work. Let it show this is if I place. So on Thursday, quickly I'm showing you. Here you can see the movement after the W pattern. The market started markup and this markup continued from the previous week to previous week. W formation started on which day? 12th February, and it started around the crossover of the 50 period moving average happened when? In the previous week, and price started climbing up. It made a peak formation here. Peak formation, and automatically it is plotting a bear. Bear means it is showing a divergence. What we are going, price is making an higher high and it is showing a divergence, and the rest is history. Jubilant food I had mentioned on Friday, it is going to fall. There was a huge fall from the 715. You can see on your own. The 6.6 percentage captured within 2 days. Captured within 2 days. Yes, friends. Suppose if you would have traded in the traded in the option, Jubilant Foodwork P, by identifying the market cycle, you could have made 6.6% is not a small amount. You could have pocketed very good amount of money. Now, at present, it is trying to make a peak formation low. Trying to make a peak formation low. This is Monday, and Tuesday it has come near the weekly low. So suppose if it comes down, it is preparing itself because there is a crossover like this. It can go down also. It is interacting with the 20 and 50 period moving average. It can come down, and again the cycle may start. Markup cycle may start. If it comes down, there is also a level to watch out. W formation, from where the market. So you can see the market goes nowhere. It goes, this is a cycle, goes up, comes down, goes up, it rotates. So market will, if you take the curve, it will go like this. Market cycle will go like this. And then if I extrapolate it, yeah, I'm not able to take it out. The tool limitation is there, and you can take one more curve like that, and you can, this is the cycle which continues on and on. And in our weekly template with these two setups, we are going to identify the day of the week when it is going to set up peak formation, and we are in the markup phase at the right time of the market phase. We are not entering into the sideways market. Sideways market, or the accumulation phase or the distribution phase, is the preparation phase for the markup. So we are entering with the big players, not with the retail money. So then you people will have edge over other traders. You can master this setup, and this is the setup. There are so many, even other patterns will also be formed. In one of my video in the Imami, I discussed about the Batman pattern. That also you can go and see. So you can identify the patterns, and it becomes easy on RSI to identify the patterns. Sometimes it will not be uh, evident on the price chart. Sometimes it will be very, very clear on the RSI chart. So you can utilize this. These are the two setups. Master these setups, and you will definitely, you will be profitable. I guarantee this. But you have to do honest work, and you have to master this. You have to go on seeing the chart routinely. It should become your routine. Then you will get trade in every other instrument. You will not sit. For example, since 2 days, there is no trade on the index Nifty or a bank nifty, if you are an option buyer, there is no trade because it was going sideways. It is in the phase of distribution, redistribution. Market is in the after the gap down, markdown. It has halted on Monday and Tuesday, and Wednesday is holiday, and Thursday it may gap down. Again, one more gap down can come in the market. So you will get trade every day in every other instrument if you do your homework for these setups and market identification of the market cycle. It becomes easy. Stock selection is become easy. Not getting the stocks from any screener or anything, you can trade with confidence. Thank you very much, friends. Narnakshi Swami signing off.